When investing at such an early stage, it really, really comes down to the team, especially in building AI systems, backing a team that can execute, has the vision, has the technical chops and technical skills very much married with the business acumen, and backing good people who are hustlers.
Hi, I'm Esther.
And I'm Sean.
I write about AI news here at Tech Target in Massachusetts.
And I edit Esther's stories.
We're here to talk with tech experts about everything AI and ChatGPT.
And don't forget about Google Bard.
Whether it's who's ahead in the generative AI race, the metaverse, digital twins, or even the latest in autonomous vehicles, we've got it covered. Right, Sean?
Yep, we've got it covered.
Hello, everyone. Today we are speaking with Kleida Martiro, partner at Glasswing Ventures, a venture capitalist firm. Kleida started her career by studying economics and math at Mount Holyoke College and interning at tech startups. She later worked for a New York startup as a data scientist. During that time, she worked with developers and trained algorithms. She later got her MBA at Northwestern University Kellogg School of Management and later joined Glasswing Ventures in 2019. Within 4 years, she became partner, which is quite a feat. Thank you for joining us on today's podcast, Kleida.
Thank you, Esther. Wonderful to be here.
So I read a bit of your background, but what really interests me is the recent interview I read is that you've always been drawn to AI. So what exactly drew you to the technology?
To me, it was the power of technology and what it can achieve. Since my summers as an undergrad at Mount Holyoke, I was always drawn to math and the quantitative sciences. And throughout my experiences, I had the opportunity to work in various AI startups. Some were very, very small, a couple of folks, some were as big as 10 people, and that's not really big, but that's big in startup land. The just how the type of automation, the type of making my workflow better, how you can the concept of creating or making machines think, learn. I found very intriguing, and it was very, very interesting. So when I graduated and I started my career as an analyst at Digitas, on the side, I actually started learning how to code. And that's where the more I dug into how problems are being solved, how technology worked, I fell in love with it. And since then, I continue to learn more. And it's just the promise that the AI has to revolutionize industries, from healthcare to security to infrastructure, to software development. To me, it's really inspiring.
What would you say during those early years? What was the biggest learning experience you had as working as an analyst or a data scientist with startups and working with AI algorithms and working with developers?
My experience those years was truly incredible. If I were to pinpoint the biggest learning was the realization of the role of collaboration and communication play in innovation. Um, Training AIs is a deeply technical task, but it's isolated. So it's very much highly dependent on a cohesive team efforts. You have developers, data scientists, business professionals, all bringing in different perspectives and skills to the table. So learning to really communicate complex ideas and foster that shared understanding across diverse teams were very crucial. It was very, very crucial. At the same time, I learned the importance of iteration. AI development is not linear. It's a journey and has its own share of challenges and surprises. So I recall from my time at Social Flow, we tested, we iterated, we learned from failures, we celebrated successes. But each algorithm, each model, each tweak was a step forward to define and to refine our understanding and improving our software and ultimately delivering real tangible business value to our customers.
That's very interesting. I guess the next question is, you had built your time as an analyst and a data science, right? So how do you think it relates to the startup market and how it favors the market as a whole?
When I look at both of my experiences, As an analyst, I was closer to the business side of operations. Um, it made me realize that AI isn't just about algorithms and models, but it was about delivering tangible value to users, addressing real world problems. Startups, given they're in limited resources and they need that rapid growth, they have to be particularly strategic. So in that sense, they need to identify market gaps, how to leverage AI as a competitive advantage, and so being an analyst taught me that the importance of aligning those AI projects with clear to align those AI projects with clear business objectives and returns. On the flip side, as a data scientist, I really delved deep into the mechanics of AI. As I mentioned, tuning algorithms, ensuring that the models were deployed both efficiently and effectively. And this really underscored the importance of agility in AI development. And the startup environment is dynamic, it has quick pivots, frequent changes in strategy, and that requires AI solutions that can be quickly adapted, quickly scaled, and really scraped in response to feedback or changing market conditions.
So let's move on to Glasswing Ventures. I hate to do this, but Esther, but I want to do a slightly two-part question. This bad habit, but so first of all, what kind of startups do you work with at Glasswing? And also, could you walk us briefly through the process, like how the relationship works between the venture capital firm and the company they invest in? Do you get an equity stake in the company? Do you get seats on the board? Are you part of everyday operations to some extent in terms of consulting? Yeah, and what kind of startups does Glasswing work with? I'm not sure if is it all AI or is it tech across the board.
At Glasswing invests in AI-enabled and frontier tech B2B software companies in the enterprise and security markets. As a firm, we are thesis driven. So we have built strong conviction around AI since 2016 as part of Glasswing, and then our founders, managing partners were investing in AI before it was called AI since 2010. And back then it was predictive analysis, analytics, and now data science, and now AI. We look, I mentioned that because we have built strong conviction around certain areas where AI could really revolutionize industries. And with that, we have built our thesis at Glasswing. And that thesis is built into two parts: connect and protect. Under the connect pillar, we look for startups that are building solutions in that smart data infrastructure layer, automation as it pertains to specific functions. For example, think of automation in software development and AI or tech. And thirdly would be vertical applications. So really solutions that lie at the cross section of AI in manufacturing or supply chain, and that's one pillar. The second one is what we call protect, and it's all about security. The main areas within security that we'll look at are the emergence of cyber and physical, so cybersecurity, and then the emergence of both. Coordinated defense. We have one portfolio company called Black Kite in that space, and data governance, compliance, and regulation. And within these, recently we've spent a lot of time in identity and access management. So from a strategic point of view, those are the main focus areas. When it comes to stage, we invest in seed, primarily seed, and then we do some pre-seed as well. And what that means on in terms of check sizes, we write checks between 1 to 3 million. We we in exchange we ask for a board seat, double digit ownership, and then we have a whole what we call building partners and platform team that is very, very, very much hands-on to help portfolio startups scale and grow in a healthy and sustainable way. What that means is we have um, domain experts on the team that mirror what a startup C exec suite looks like. For example, a former CMO, Carol Myers, who was a CMO at Rapid7, LogMe and Unica, Shiva, and then Vlad Shenoa, he was a CTO at Nuance for almost 2 decades, and prior to that, chief data scientist at Kurzweil AI, and he was on the team that invented Siri before Siri got acquired by Apple, and so forth. And then we have others that are coming from the revenue side, CROs, multi-time CROs, and CPOs. And we've built this team and this structure so we can very much help companies grow and scale fast at this early stage. The your second question, Sean, was how do we help them? We help from introducing them to customers that they are targeting. I would want to mention that we have for Glasswing 54 exclusive advisors. They range from AI luminaries to C executives, both on the connect and protect side of the house, from Fortune 100, 200, 500 companies. And they are exclusive with us, and we leverage their expertise, their passions, and their network to help portfolio companies. And one facet is finding customers, finding the right people within those firms to test out ideas and get those launch partners. Then will be recruiting. So we have placed from C exec levels to even interns within our portfolio companies. Strategic advice at this early stage. You need someone to be a true partner and to kind of bounce ideas off of each other. And then when it comes to fundraising, so truly finding, we invest in seed, as I mentioned, so finding partners that can lead or invest in the next rounds of financing. So A's, B's, and so on. We serve as a true partner. We get involved as much as the startup wants us to get involved, and we step aside when they don't need our help. But we're very much founder first. They're part of our extended family. We help as much as we can help, and we help as much as our executives want us to help. And coming from that space, I absolutely love that relationships we've built with our portfolio.
I kind of want to ask a couple follow-up questions and then also a couple of clarification questions just for people who might not understand what seed, pre-seed, and all of that means. If you can just clarify that. And then I think maybe this is down below, but I wanted to bring it up because you're talking about how involved you get. So what exactly does a startup, how exactly do you approach a startup, or how does a startup approach you? Because like it seems like sometimes you're as involved as from the beginning of like the startup is just starting, I have an idea, or perhaps just like in the middle. So is it just like, oh, I have an idea and I'm thinking of a startup, or do I already have to have a team? Do I already have to have a product? How exactly does that work?
I'll define seed and pre-seed. As I mentioned, we do seed. So at that point, a lot of startups have received some capital or not before. Typically, how the stages are shaping out to be today is that you have that family and friends accelerator rounds, pre-seed round, seed, and then A, B, C, and onwards. At the seed, we typically see startups that have a team, have tech, have a product, and have a couple of design partners or early customers. So they've proven that there is a pain point in the market, and they are building and have built a technology that is unique, technically unique and differentiable to what's in the market already, to address these pain points and to drive business value. And what comes with that is also very well understanding of what the market looks like and what the competitive landscape looks like. So typically that's the stage that we see we look at startups. So how do we approach sourcing? I think that's what you were getting at. It is very multi-pronged and multifaceted. We have our network that reaches out to us. So for example, founders, repeat founders for Glasswing, or repeat founders for our partners, that they exit their company and they start something new and they come to us as we're the first capital in, so we're their first call. There are friends of those of existing executives who are starting something in an XYZ. So we'd have, actually this past weekend, one of my founders called me and said, "Hey, a buddy of mine is starting something in this industry. Would you be open to chatting with him?" So those type of relationships. We have our advisors and our collective network that also refers startups to us. At the same time, given how early we are, we actually build very strong relationships with ecosystems. So we have very much presence at MIT, Harvard, Northeastern, Boston College, Tufts, Boston University, and I'm sure I'm forgetting a couple of universities there because Boston is so rich in that sense. And also my own alma mater, Mount Holyoke and Kellogg. So very much tap into what's happening at the inception within this campuses. And then we do our own outreach. So internally, we have built a programmatic system, AI system, to truly understand what the startups that will need funding, and how do we outreach. And we do our own we do our own outreach for that as well. So as you can see, it's a very multi-pronged. One thing I also want to mention is VC. So the VC ecosystem. So typically, later stage VCs will see something early that is really good, they refer it to us, or even early stage VCs who see something that's like pre-seeds, I see something that's later for them, they pull us in. So that ecosystem is very valuable to finding to sourcing the right companies as well.
So you're investing pre-seed and seed. They're very small companies at that stage. So what's the likelihood that they're going to succeed? I mean, what's the risk to you as a firm, and obviously to them putting their life's work and their resources into this? But so then what criteria goes into your selection process to give you the best chance of, and them the best chance of succeeding at some level, at least maybe going on to the Series A round or whatever?
When investing at such an early stage, it really comes down to the team. So finding or backing a team that has, especially in building AI systems, backing a team that can execute, has the vision, has the technical chops and technical skills very much married with the business acumen, and backing good people who are hustlers is truly kind of what makes it at this stage. The and that is, it's just very much learning how to read people, learning how to build relationships, and in a way betting on that is like the very first. It comes down to people. Then it's about the technology. As I mentioned, we're very much focused on AI and frontier tech. So we want to understand not just Gen AI, but just there are so many facets of AI, and Gen AI is just one sliver of it. So understanding what the technology can do, how is it being trained, what data, what is being used, what are the founders really knowledgeable about the state of our technology, how are they leveraging what's already available, and what are they building on top of that, so how to really make it unique and differentiable. And then from there, how do you actually scale it? Technology might be great for the early stages, for like your friend is a customer, or your previous coworker is a customer, but you really need to understand, if you're selling to the enterprise, you want to understand how technology scales with huge amounts of data big numbers and teams using it. So what is the approach and roadmap there? And then from there, it's going to market. I think the biggest risk here is finding, at this stage, is making sure that you're finding product market fit, getting that repeatability use case to make sure to understand that this is the right person I'm selling to from a go to market with a go to market hat. This is the right person I'm selling to within this specific industry. This is my champion. This is my buyer. This is my user. And this is how I'm driving value for this company or this potential customer. So truly figuring that out, the repeatability use case and figuring out the repeatability and what the use case is and who your buyer, user, and advocate or champion is within those potential customers. I think that in a way defines product market fit. And that's where typically once companies get to the A, they need to have figured that out. And of course, the biggest risk is they need to raise the next round of capital, so they need to have cash.
I'm sure that perhaps not all of the companies you invest in are successful, right? So, what happens when that happens, right? When they don't necessarily have the success that perhaps they think they're going to have, or you think that they might have, or oh, they just don't yield a return on the investment.
We've been so far in my experience, in my journey with Glasswing, we're still pretty young, so we haven't seen those yet. But the typically, as I mentioned, I've talked about how close we are with our founders. So, and we're very transparent, and that relationship allows us to have very transparent conversations. When we all agree that a startup is not going to achieve their goal because of a reason or another, we prune those companies and we actually land them. We help find a banker. We help find a home for those startups. We've never ever, it's not in our ethos to let a founder high and dry and be like, whoops, this happened. We have other companies we need to take care of. This is not how we work, and it's just not in good spirit, not in good spirits. So we find a home for those companies. We make sure the founder is getting taken care of. We make sure that the team is being taken care of, and that is credited to our team's connections in the ecosystem and ability to drive that process along with the founder.
Okay, so this question is a little convoluted. Esther's working on a story right now, actually, about this new emerging format in which huge tech giants like Microsoft invest in AI research labs like OpenAI, and then Amazon has done the same with Anthropic to a certain extent. Oracle has done it with Cohere. So the old model used to be, when Google DeepMind was growing and they were acquiring lots of little AI startups, putting it together. So is Microsoft, so is Google. But now it seems to us like the age of the smaller AI acquisition is kind of over. And every AI startup thinks it can be the next OpenAI or something like that's in the generative AI field anyway. So how does that change the landscape for VC strategy, investing in startups when every startup thinks, no, we don't want to go 5 years and get acquired and make a lot of money. We want to get bigger and bigger and bigger and become a $20 billion company. So how does that change your role if you accept our thesis?
So we have a very slight different thesis as to how we see that space, Sean. We look at this. I'll focus with Gen AI because that's how this all started. Within generative AI, we have built our own three-layer thesis, where the first bottom layer we have the foundation models, and the foundation models are the what you mentioned, the Anthropic, OpenAI, Cohere, and those are the equivalent of the Amazons and Googles in early 2000s. For us, though, the foundation models will very much take the form of the oligopoly? No, how do you say that? Monopoly the monopoly where you have these big winners, but those are not startups per se, because their seeds didn't, or their seed round did not look like a seed round. And at the same time, they require a lot of compute, a lot of resources, large P&Ls backing them. So you see a lot of these big companies invest. So we are shying away from those open source or closed source large models. Then moving on to the next stage, or the next layer, we have that middle layer, where the middle layer that serves as the picks and shovels of the Gen AI boom. There will be the next data bricks, for example. And in that layer, we see prompt engineering. We see companies building and fine tuning, model orchestration, a lot of those. Like, how do you link the foundation model with the next layer, what the application layer? And here, this layer here is crowded today, is nascent, very, very nascent, and there will be a few winners there. The third layer is the application layer, and that's where we believe most of the opportunities lie. The Of course, then you have a lot of the kind of vertical, what we call vertical or end-to-end applications, where you have companies like one of ours, Common Sense Machines, that is building an application, their own middle layer tooling, and then their own foundation model that's being built on top of existing models today. And that is what we call end-to-end layer. So this is how we see the whole Gen AI landscape today, and there's so much opportunity for builders to build AI technologies and for investors to invest in AI startups that truly will have outsized and successful returns.
So speaking of generative AI, right? You've been in the industry since before we had this whole boom in the generative AI space. How would you say, like, you've seen, what is the biggest difference you've seen when it comes to generative AI and where we are today?
From a technical perspective of just role,
Technical perspective.
Gen AI has been transformative in many ways. Just the scale of the technology and the compute power, and the ability that it has to mimic human conversations is truly transformative. The To me, that's been like one of the biggest, most transformational tech driver. This technology has been around for many years. It's the mass consumerization of it as well completely changed the landscape. So in that sense, it has absolutely opened many new avenues and doors, both for builders and founders to build new solutions, and for investors to look for how are these technologies transforming literally every industry out there. The new form of communication is through chat and search these days. So it even changed our behavior on a day to day. So in that sense, I'm very excited about what's to come, and how will the landscape look from a year from now.
That being said, what would be your advice to, maybe somebody coming out of Mount Holyoke or MIT or BU and trying to start a startup, and looking for funding, and they have some tech and they have an idea for a product. So what would you tell them if they were really new to this but look promising? What kind of advice would you give them?
I'd be to surround themselves with the right mentors and the right people, and that is way harder said than done. But not every problem needs not every solution needs Gen AI. They may need so many other forms of AI. So do your homework in that sense. Look at the market, talk to your mentors, talk to your, if you're a PhD, your advisors. And then I always I'm always up for talking to founders who are just having an idea and starting and thinking about how to start, or how to go about starting a new company. I love talking to founders at that early stage, because the the chance is that I probably know somebody, or we know somebody that I can put in touch that they can help each other with, or I can introduce them to an enterprise that has looked at this company at this pain point before, so they may provide them a different perspective. Surrounding yourself to a lot of people just adds to tribal knowledge of the problem, who's the buyer, technology, how to build it, and you build those long-term partnerships as well.
So I want to go back to something that you mentioned before, which is you mentioned the three layers, and you said basically the third layer is where you see an opportunity. However, I wanted to go back to the second layer where you said if you feel like it's kind of crowded, right? Is that correct?
Uh, Two things I would say: the application layer is where most of the opportunity is, and the metal layer is crowded right now, but it's extremely nascent.
Okay. Um, what? How do you think that might shape out as we're going through in the future?
Honestly, it very much depends on what also the foundation layer and the application layer, or solutions in those layers do. Because you will have a lot of companies today, for example, in the metal layer, where they will just get commoditized because the foundation model providers will provide it for free. And then you have at the application layer, you have a lot of companies that will build their own metal tooling. So, for example, I've seen companies that build their own agents, and agent specific tasks. Agents are in that metal layer. They're part of the picks and shovel toolkit to drive the solution or to solve the problem. So in that sense, we need to see how these two, kind of the bottom and the top and the bottom layers, will behave in order to very well understand what the middle layer will do. But at the same time, the middle layer is very important because it really serves as a channel to drive that, to make applications happen. Um, we've seen a lot of solutions that were started in the Q1, Q2 of this year that got in a way folded under the foundation layer. LangChain, the open source community, is huge as well. So keeping an eye on what's happening there. So it's still very early to predict who the winner will be because of these two reasons. But one thing that I'm observing is that there's companies very much entering the middle layer, but then exiting very quickly because of those two reasons.
I think I wanted to just go back quickly to the idea of like AI enabled, right? So, can you define that? Especially because I know that there are a lot of, when I spoke to your founder, CEO, sorry, Rosina, she was talking about the idea of like not every problem needs to be solved with AI. So, how do you, like, I guess, weed those out?
It's true, not every problem needs to be solved with AI. It's, for example, I will touch on a company of ours, Retrocausal, where they're an AI and computer vision enabled for manufacturing. Is manufacturing like has a true pain point of how do you automate that assembly process? There are today how it's done is basically you have um, in order to put things together in the assembly line, workers have just a laminated piece of paper that tells you how to build something, truly the nuts and bolts. And that's extremely outdated. You're using a piece of paper and the human eye as the measure to build things together. And those things can be medical devices, the the piece of an aircraft arm, really really impactful things that if you put it wrong, then the consequences are detrimental. So using a great computer vision technology to optimize a workstation to help the worker, and then to audibly and visually tell them that, hey, what you're doing right now is wrong, so put it well together, so when it goes down to the next station and the next person, um, it's getting done right, and you don't go down to the QA and then say, okay, it's wrong, and then come back again. And at the same time, it's solving the problem that the workforce in manufacturing is actually more people are leaving the industry than are coming in. So you're dealing with who are the workers and who are the skilled workers to really address this problem, and then how do we train existing workers. So it's a very tough dynamic, but with the right technology, anyone can come in and say, I will do this job um, for the day, and then because I know that I don't need to trust my tired eye anymore, or follow the steps of this laminated piece of paper. The retrocausal will tell me how to best optimize my workspace and how to put things together the right way, and I will not make mistakes. So in that sense, it's extremely powerful. Um, there are other solutions that, as Rina mentioned, you you don't need the ROI of embedding AI in a solution may not be as high as one can do it by hand or other ways. So, but typically we only look at AI solutions. So I'm very much looking at opportunities with that eye.
So, what's your budget for each year?
So typically we work in funds. So Glasswing's first fund was 112 million. Glasswing's second fund, which we raised last year, is 158 million. And out of that 58, a portion of it goes to Glasswing as a firm. So our operation expenses, our salaries, and all of that. And then majority of it, of course, goes to investments. And how those work is we write, as I mentioned before, checks between $1 to $3 million checks, and then for founders, we keep very, very healthy reserves for follow-on investments. So we lead, co-lead seeds, and then we participate in their next rounds as much as we can. So by healthy reserves, we mean around like 2x, 3x. So it's very unique to Glasswing because we're very disciplined and very concentrated, and really back the founder and support them through their life, through the life of the company. So that allows for Glasswing to invest in roughly 20 companies in this fund. And typically the lifetime of the fund itself is about 10 years.
How do you fund your fund?
Our investors are um, limited partners, LPs. They range from institutional investors, endowments, pension funds, family offices, and it's keeping that in mind. Actually, um, it's very interesting to us because at the end of the day, when you think about it, we are funding, for example, if an endowment or pension fund comes to one, truly we're trying to back the right founders technology with the hope that we are doing good and well, as Rudina says, because we are returning that investment on pension funds. So at the end of the day, it's always that big vision that we are also helping very different groups, endowments. A lot of the schools, a lot of financial aid comes from endowments. So kind of making the right investments will help those schools in particular to allow more students to join who don't have them, or to be accepted to schools who don't have the means to pay for the school. So the whole big vision of why I do and why we do, other than the technology and the what it's doing to industries, we're doing also good and well in the larger big picture of things.
Okay, I have one more question. I think we're probably going to close out after that. This is more personal in terms of your day-to-day work at the company. I'm curious, like, how busy are you? I know you had to stop your Slack messages from coming in. Like, how many founder groups are you working with at any given time in your personal portfolio? And then, so you're doing so much. You're helping advise them. You're arranging financing. You're looking for new ones. You're attracting other investors. So it must be like a 12-hour a day job.
Minimum.
Can you just talk a little bit about like how do you manage all that different parts of the business, and how many clients would be in your a typical VC's portfolio?
It's definitely a busy job, but I love what I do. It's, as you mentioned, Sean. I have so many more companies in this age of AI pitching. And just looking at new companies is complete. The volume of sourcing is just the highest it's been. So that it's very. I love it. I love talking to founders. At the same time, within our portfolio, it's not every portfolio needs help at the same time. So that also is a good balance that comes with the nature of it. There are some. It's always who is the focus of the day, for example, today, and then how do you manage those. Um, my day has no hours. My weekends have no hours. I'm always on the phone. I'm always talking to people. Even my social circle is very much intertwined with my professional circle. Some of my really good friends are in VC. Some of my really good friends are founders. So it's but I love it though. I don't know how I balance all of it. I can't give you the right answer there because I don't know how to balance all of that. But all I know is that I'm always learning. I'm always being challenged. Um, there's not one day that I get bored, and I love that. I'm always meeting smart folks who are changing industries, and that's extremely inspiring and rewarding. And that just makes me want to push forward more and continue doing what I'm doing.
Well, Kleida, thank you so much. You're our first investor venture capitalist to be on our podcast. So congratulations. You were so interesting and it's such a cool job. And so to our listening public, you can check out this podcast on targeting AI on Apple Podcasts, on Spotify, on Amazon, Google, all the other podcast platforms, Podbean, and also on Tech Target News. Come and listen to our Targeting AI podcast. And maybe, Claudia, we can have you back again next year and see how successful you were this past year. But anyway, I appreciate your time so much.
Absolutely. Thank you both.
Thanks for listening to today's podcast. Please remember to share on your favorite social media platform and leave a review. For more on today's topic, please check out the Tech Target News website.